All right. Um, so this just kind of gives a little bit of background summary about the program. I believe this was included in the application. Um, but just kind of talks about the fact that the total amount available is 2.5 million in state tax credits for nonprofits for you to distribute to help you raise funds to support the program you applied for on your application. And just to kind of reiterate, the tax credits are distributed to donors in exchange for contributions to you and are worth 50% of whatever the donation amount they give you. So if they give you, say, and this will be covered a little bit more later, if they give you $200, then their tax credit amount they get would be $100. And then they go directly to offset the donor's Indiana state tax liability. So they're claimed on the Indiana state taxes. Um, so donations are reported to us by you. Each January, I compile all the donations that were reported for that previous calendar year. And that is what is used for me to send to the Indiana Department of Revenue so that the donors can get their tax credits when they file their taxes. This just gives a link to our website. And actually, there have been updates to our website, so it doesn't quite look like that anymore. But since I'm sending this out to everybody, if you're not familiar with the website, that way you have that. This just goes over a little bit more about the process if you have any questions about why you maybe had received a certain amount of credits versus what you had requested. So the NAP program is a what's referred to as a non-competitive program, which means if your organization is a qualifying organization, your application is approved, and you haven't been restricted for any reason in participating in the program, or you haven't been disqualified for a certain program year, that means you will receive an award. New organizations or those who have credit restrictions can put up to 5,000 on their application as what they request. Returning organizations can request up to 15,000. And all of that is based on a formula as far as whatever you requested versus the total funds we have available, and the total amount requested. They will be, or pardon me, you will be granted a percentage of whatever that is, and everybody gets the same percentage. So that's why the award that you end up receiving isn't the same as what you put on your application, because we have to accommodate the funds we have available versus the funds that were requested. Some things to note on your NAP agreement is, and when she said 300 organizations, this slide does mention 299. There literally are almost 300 organizations. We had 299 approved organizations this year. Um, the award number is something that you need to pay attention to. You need to keep handy because this is something that you will need for a lot of things. You will need it for submitting your closeout report. You will need it for any surveys that get sent out as far as, if we end up reallocating credits or there is a survey I'm going to send out about updating contact information, and a survey that I have ready to send out about what public contact information you want from your agency on the website. And then on your donor contribution forms you provide to your donors, this number is going to be your go-to number. So, and keep in mind that these three numbers at the end are not the same every program year. So if you participated last year, your award number would have been 2023 NP 3 digits. Those 3 digits are likely not the same on your 2023 award as they are for your 2024 award. With 300 organizations approximately, it's hard to keep that number consistent between years. So make sure if you're completing paperwork for 2024, you pay close attention to what that number is and kind of keep that either memorized or handy so that you know whenever you have a question or whatever you're submitting things that you can provide that information. So we talked about this a lot already, um, but your award versus your funds raised, if you sell all of your credits, you will actually raise double the amount in funds of the tax credits you were awarded. So there are some examples on this slide. If you were awarded 11,100 and you sell all of those credits, you will have raised $22,200 for your project. And so the donor contribution form, if you use the fillable version, will do that calculation for you to tell you what, if you enter the donation amount, what half of that is as far as like the tax credit amount. And it gives you instructions. So if you follow along with that, and follow the directions on there, it should help you make sure that you get to the right amount as far as the credits you're providing to your donors. Um, as you all likely know by now, you can begin accepting contributions starting July 1st. Um, if your agreement has been signed and you had somebody give a donation before the agreement was signed, but it was on or after July 1st, and you have NAP credits that you want to offer them, the agreement states that it begins July 1st, so you may offer them the 2024-25 tax credits for those donations as long as the donations occurred within that award period. So we talked about this, I believe, a little bit, unless I'm just thinking about how I've been asked, oops, sorry, asked a question recently about it. So if we didn't, I'll just cover it again. But we don't follow the same year as the tax year. The NAP program follows the Indiana fiscal year, so it doesn't align. Our program runs from July 1st through the following year on June 30th, whereas most taxes that are filed, especially individual taxes, follow the calendar year. So the tax year in which the donor is receiving credits may not be the same as the program year. So a couple of examples here. If a donation is made during the 2024 calendar year for the first half of the program, so July 1st through December 31st of 24, they would claim that on their 2024 Indiana state taxes. However, if the donation is made during the second half of the current award cycle, so January 1st through June 30th, that would actually go towards their 2025 taxes, even though it's part of the same 2024-25 NAP award, if that makes sense. This is something that I get a lot of questions about, so this is helpful to kind of refer back to this slide if you have questions or you can't quite remember how that goes. As far as donations go, you can take multiple donations from one donor. Also, donors can donate to more than one organization. If multiple donations are made, and they're credit eligible, then they should receive a donor contribution form for each one of their donations. However, when you are doing your reporting to us, as long as it's okay, let me clarify, as long as it's within the same reporting period, you should or can, it's best practice for you to enter those as one donation with the most recent donation date from that donor. It's not going to mess anything up if you enter multiple donations from the same donor during that reporting period. But it leaves more room for error because the more times you have to enter something, say you mistype like a social security number, that's a big deal that could cause their credit to be denied. So just keep that in mind when you're entering your donations. Also, if it's for different reporting periods, because as I refer back to the previous slide, those go to different tax years. Those are actually during different reports that I send to the Department of Revenue. So for instance, if you report during the second half of this current award cycle, that report will get lumped into what I send the following January. So it's not going to go, obviously, in this one that I'm doing this coming January. It's going to go in the one with the following January that gets lumped in with the first half of next year's program year, because of the way the tax cycle doesn't align with the program year. A single donor may only claim up to 25,000 in total credits. So 50,000 in donations for each calendar year, even if they donated to multiple organizations. So you may not know that because you may not know what they've donated to other organizations beyond yours. Make sure you're not accepting more than that in donations for your organizations. And if they're giving a large donation, make sure to let them know that you can only donate up to 50,000 total and receive only up to 25,000 total. So if they've donated to other organizations, they know that combined between the donations they give to you and the donations they've given to other organizations, that it's going to be capped at 25,000 in credits. And this, like I said, you may not know, but it's what they're donating to other organizations, but just make sure they're aware. And then each donation must be for a minimum of $100. So I believe, if I'm not mistaken, it won't let you enter it into IHCDA online if it is under $100, unless it's for your last amount that you have left. So if you have less than $100 in credits remaining, you can enter whatever the remaining amount is. When donations are greater than available credits, the form will guide you on what to do as far as like how to calculate that. On line number 3, it'll be the lesser amount of what you have left. They are allowed to donate more if they're understanding that you don't have enough credits to give them. You would put their full contribution amount on box number 1, but then you would still follow the directions, and their credit amount that they receive will be less than that 50%. So just when they give that donation, make sure to advise them of that you can take their full donation if they want to give you more, but you can only give them however many credits you have left, and it's not going to be the full 50%. Eligible donors, individuals, families, couples, and then corporations are eligible to donate as long as they have Indiana tax liability. Donations from donor advised funds are eligible in some cases. And then charitable organizations and foundations are not eligible to donate. So a little bit of information. If it's a family or a couple, if they're filing a joint return, make sure that you only put the name and information for the head of household, that first person that's listed on their tax return on that donor contribution form. It is helpful to make sure, or it's really important actually, to make sure that if they're making multiple donations and across multiple organizations, that you use the same individual's name and then the same social security number each time, because that can create an issue when submitting that tax return and trying to claim that credit on the Department of Revenue, because then they can come back and potentially cause some issues or cause some denials to happen. So making sure that you let them know whatever they have donated, if it's like a husband and wife and it's usually in the husband's name, that all of those donor contribution forms should say the husband's name and have the husband's social security number, or vice versa. If they're filing separately, only one person can claim the credit. So that one person's name can be on the donor contribution form. The exception is if they make one contribution and they want to split it between the two of them, then you can give them two different donor contribution forms with that tax credit amount split. So it's basically like two donations, and you will put one of the parties' names and social security numbers on one form with whatever portion of that amount is going to be claimed by that person, and then the other portion of that amount on the other form with the other person's name and social security number. And make sure you do the same when you're reporting. Organizations and corporations, when they donate, the credit can be claimed directly by the organization. Then the donor contribution form should have the organization's tax ID number and name. But then at tax time, the owners and stockholders cannot claim the credit. The credit must be claimed by the organization on their tax return. If they want to distribute it between their members or shareholders, they can do that, but then it doesn't get claimed on the organization's tax return. You would issue a separate donor contribution form for each party who will be claiming the credit with the portion that they're claiming. So it would be divided evenly between them, and it would be like separate donations for each of them. But then the organization name would not be on the form. Those individuals' names and social security numbers would be on the form instead. So it would be like a person claiming it as opposed to that organization. So make sure when an organization is claiming that you keep that in mind. And then donor advised funds. This is not an area that I have a lot of familiarity with, but we do kind of have a checklist or flow chart of like how to handle those. They are accepted in some cases. And so this is also in the manual, but I urge you to refer back to this information if you get a question about donor advised funds and how and whether they are eligible for donation, and kind of follow along and answer the questions yes or no, and it will guide you. Okay, so eligible contributions are cash, check, or credit card, stock after it has been liquidated, and the value that can be claimed is the value at the time minus any fees. And then once that is sold, because it has to be sold, the transaction type would be listed as cash. Donations from 401ks do count towards the federal taxable income, but are also eligible for a federal charitable contribution deduction. Donations from IRAs, including qualified charitable distributions, are eligible, but they do not count towards the donor's federal taxable income and are not eligible for a federal charitable contribution deduction. United Way designations are eligible. The amount of the donation is the amount actually received after any fees. And that should also be listed as cash. In-kind donations, as long as they are building materials used in the approved project or activity, and then property donations if they pertain to or are used for the activity. Ineligible contributions would be services such as sweat equity, supplies and equipment, and then donations from charitable organizations and foundations, as we covered, and then membership dues or fees. This just kind of goes over required record keeping. So for every donation, it requires a donor contribution form, a copy for your agency and a copy for the donor. And then I will keep this chart here. I'm not going to go over each individual thing, but just to give you this to refer back to as you are taking donations to know what types of records you should be keeping. The other thing to keep in mind, because it's a tax credit program, records should be kept for at least 5 years after the award expires. And if there's any type of litigation or anything legal involved, they should be kept beyond that 5 years until that legal process is over. Slide just outlines the program timeline and due dates. This is something that you can keep and refer back to. The thing that I will point out, other than when each of the benchmarks are due. We already talked about that, the hold on a second. We already talked about that you don't have to complete the second report if you sold all the credits during the first half. But I will say, if you don't sell all of the credits by the and I believe it's March, okay, March 31st is when the credits are technically due to be sold for this report. That's April 14th. Um, if you don't sell all the credits by then, we generally will not reallocate or deallocate anything at that point, but we will ask that you continue to try to sell your remaining credits through June 30th. And then once that ends, enter any remaining donations that you have received in your efforts to sell the remaining credits. And then the closeout report is due after the award period, so that will be actually September of 2025. And the reason we do that is to give you the opportunity to actually spend all the funds, because the closeout report is not having to do with your donors that you're entering. It's actually having to do with how you spent the funds you raised using the NAP credits. And so we want to make sure you had the opportunity to spend those funds before submitting that report. We talked about IHCDA online, and Lisa went through that with you. And we talked about that I would submit the report in January to the Department of Revenue. There are no forms that the donor has to provide with their tax return, as far as like forms provided by your organization or by IHCDA. So when they submit their tax return, everything we submit electronically, the Department of Revenue is already notified about their donation. So if they ask you for a form when they're submitting their taxes, there isn't anything. Another reason to make sure they have that donor contribution form is if the Department of Revenue sends them something asking for a letter from IHCDA, what they need to provide is that donor contribution form, which does have the IHCDA letterhead at the top. And I confirmed that with my contact at the Department of Revenue. So just making sure that they have that form and it's completed and fully signed for them to show as verification of their eligibility for the credit. So we talked about a lot of this already. Why is it important? It provides documentation for reporting donor credits. Also, it allows us to monitor the progress, see if the benchmarks are being met, us keeping track with how many of the credits have been sold, making sure that the credits are not sold in excess of what they are allowed to be, because that's something that is in the law, that only a certain number of credits can be sold. And so based on what you enter in our system is what is actually the credits that are available and that we consider as being sold, because that's what gets reported to the Department of Revenue. So making sure you submit everything accurately is really important to making sure that donations and credits can be claimed without issues, which I know with the number of credits that are claimed and sold, there are always going to be some, but that's something that I really want to try to work on minimizing, because I know that that can be difficult for everybody, especially the donors. So we talked about the reporting process, and this is just kind of to refer back to what you need, but they'll request all that information in the system. There are the three reports, the 60% due in January, the 100% due in April, and then the closeout, which we talked about due the following September. And 60% is just for all of those donations that were received between July 1st and December 31st. That is a benchmark that you are required to sell 60% of those credits that you were awarded by December 31st and report that on your first half or 60% report. And that is completed in the system that Lisa went over. The other thing, which I believe is included on a later slide, but if you don't meet that 60%, it's potentially or you are potentially eligible for your credits to be deallocated if we determine that we will be reallocating credits, and I'll talk about that here in a second. Um, and it can affect your eligibility either to participate or to receive the full credit amount for the next year. So you could potentially have a credit restriction if there is an issue with you being able to sell the 60% or meet these benchmark requirements. Okay, deallocation, reallocation. So in previous years, if an organization didn't meet that, we automatically would deallocate the remaining credits you had and then reallocate them to any organizations who wanted to receive additional credits. Um, because there have been situations where the amount of credits available for to be deallocated didn't really amount to enough for those who wanted additional credits to really make it worthwhile for them. We do not always do that. So in January, along with that report you do, I will send out a survey to find out for those who didn't um, meet their 60%. Um, well, I guess for those who didn't meet their 60%, they would be automatically eligible for deallocation, whether we go through that or not. But for those who did meet their 60%, who have remaining credits, if they would like to voluntarily deallocate anything, and for those who met 100% before or by December 31st, if they would like to receive additional credits. And based on the information I see as far as what the credits that would be available versus how many organizations want more credits, I can determine whether or not we will go through deallocation and reallocation for that year. So that's just something that I'm going to go ahead and send out so that we can get that done in a more timely manner for the next year. And so that will be sent out in January. And if you want additional credits, you can fill that out and say, yes, I would be interested in additional credits if we do reallocation. And so we will go from there. We may decide we don't. And in that case, if you didn't sell 60% and you keep your current credits, you still should continue to try to sell the rest of those credits for the rest of the program year, even if you missed that initial benchmark. Um, and it could still affect your eligibility to receive the full credit amount based on what you've been able to sell. However, it's better to try to sell the credits you have available for your organization's eligibility. 100%, we talked about this. You don't have to fill it out if you sold all your credits during the first half. The only exception to that is if we do go through reallocation and you are awarded additional credits, even if you sold all your credits during the first half, if you got more during the second half, then you do need to complete that 100% report so that you can report any additional credits you have sold during that time. And then we talked about the closeout report. Um, and so the one other thing I would say about the closeout report is if you have not spent all of your funds and it is a couple months still before the deadline for that to be submitted, don't submit your closeout report until either approximately like a week or so before within that time frame of when this report is due, or until you have spent all those funds, whichever comes first. So you obviously still want to submit it by the time this report is due, but don't submit it early if you haven't spent all the funds you raised through the NAP program. Also, I will mention this is a really important report to submit timely. If you submit, I will send out reminders as far as which organizations I have not received a report from when it gets close to the time it is due, just to remind you that we need to receive this report. Um, After the time that it's due and I pull all the reports, if I see that I haven't received yours, it could cause you to lose eligibility for one program year. So make sure you get that one in on time. And if you don't submit this report, you could lose eligibility for up to 3 years. So make sure you submit it. The only exception to you not having to submit this report is if you didn't sell any of your credits, in which case you likely are not going to be eligible for the following program year anyway. Claiming tax credits. Now, this is something I had added an example onto the donor contribution form just as a reference for the donors to know how and where to claim the tax credit. It gets claimed on Schedule 6 of the Indiana State Tax Return using code 828. For those of you who have had questions about that Schedule 6 form that's on there, that's not something that they need to complete, and they don't need to submit that form that is part of that donor contribution form. It is simply a reference because I have had quite a few questions over the past year about participants or donors who don't know where and how to claim that. And so that just shows an example of this is the form you use. This is where you enter the donation on that form, whether it be electronically or if they do it in paper, which I think most people don't anymore, but just so they know what the form is. And then also a reminder of what the code they enter in that box would be. But they don't need to submit a copy of that form or anything else from you unless something is requested specifically from the Department of Revenue. And the rest of this, I believe, was already covered. And then we talked about donor issues or credit denial and what to make sure you need to do. So if they contact you with an issue, the first thing to do is verify everything that you actually received, whatever the contribution that they're reporting, and that your records match what they're saying. And then they're not trying to claim more credits total that are allowed. So you can ask them about that to see if maybe that was an issue. If you then check your reporting in IHCDA online and find out that there was a discrepancy between your records, maybe there was a typo, and what you entered in our system, contact me so that I can get that corrected and send the update to the Department of Revenue. Currently, this system isn't necessarily a perfect system. I send the information to them and they verify it on their end. I sometimes will receive a confirmation and sometimes not, and sometimes they'll just correct it. But this is one thing that I'm working with some leadership within my agency to see if we can come up with a better system to collaborate on these things so that I will have more information to provide back, and there's a better way for me to track and get back to all of you to find out, where that is in the process. I don't know what that'll look like. So we're kind of just in the beginning stages. Once I get more information from the people within our organization and find out more about if and what that process will look like, if we're able to make some changes, I will let you know. And then I think we pretty much covered everything else that was on here. If you have any questions, you can refer to your award agreement that you signed. There's a lot of information in there. There's a manual and other documents on the website, which I gave the website address here again. Next steps, registering an IHCDA online. I had put after the program manager sends the email to confirm all awards have been entered. You can still go ahead and create your account and register because Lisa said all of the new organizations have already been entered. You may or may not see that award listed there yet, if not all of the awards have been entered, but everybody should have at least their organization created in the system so that they can go ahead and register. And then making sure that you get that done. Also making sure that you get that done well in advance and that you can actually access your award once we know that all the awards have been entered so that you can go in there and see the award and have access to enter donors. It's better. And this year I'd like to try to really focus on making sure everyone tries to get in there and see their award and make sure they have access to do this before it's actually time for the reporting to happen, because that can be a really hectic time and it can take longer to be able to get assistance during that time, just due to the volume of calls and emails we get trying to help troubleshoot so that you're able to get your reporting done on time. So that is the end of the presentation. Here's the information again. I'm going to take a look at, see if there are any other questions I missed. But to those of you who have to go, I appreciate you hanging in and staying with us for a little bit longer than what we had planned. And just let me know if you have any additional questions. I will make the slideshow available as well as the recording. And so if you have to leave, thanks for coming and have a great afternoon.